So we'll get started here. I'm going to do a countdown. And we will go in 5, 4, 3, 2, and 1. And welcome everyone to this episode of the Real Leaders Podcast. I'm your host, Kevin Edwards. Across the screen from me today, we have the co-founder and CEO of WhatRebelling Research, Alexander Fleiss. Alex, thanks for being with us today.
Kevin, thank you so much for having me on today. Really appreciate it.
And Alex, you're in New York, correct?
Yes, we're based in Midtown Manhattan.
Midtown Manhattan. And your family's been in New York for quite some time. Is that correct? You were just telling me?
Oh, God, yeah. No, I'm a seventh-generation New Yorker. My father's side, we've got a family member who fought in the Union Army on the northern side of the Civil War. Yeah.
Wow.
So very awesome. Colonel Auerhahn, very, very proud of him. He's, I think, my 4 greats grandfather. I'll have to double check with my dad. It could be, I believe it's 4 greats grandfather, but yeah, very proud.
Well, Alex, history fascinates me. And on this show, if you're a listener of this show, you'll know that sometimes we like to have our own, we like to conspire a little bit on this show. And one thing I like to say is that there's no human that's good at predicting the future, if there's one thing that I do know. But machines and algorithms are not humans. So the first question I have for you, Alex, is why do you have so much trust in machine learning for your algorithms to predict long-term success?
Yeah. First of all, machine learning, gets a big cloud of smoke built up by the media. What is it really? Just a probability estimator, a machine, if you will, for coming up with an intelligent way of figuring out the probability of a potential outcome. And so what we do at WhatRebelling Research is monitor the global economy and make thousands of predictions every day. And not just do we make these predictions, but we also have our confidence ratio, our risk ratio, if you will. So the machine might say there's a 60% chance that Latin America is going to underperform the next 3 months, but its confidence ratio might be too low to consider that prediction to be something that could be a buy for a client, if you will. So that's really how we look at things. We look at machine learning from a very simplistic standpoint. We're trying to say the financial markets are dominated by human decision makers, and it's 85, 90, 70, 75%, whatever the numbers are over the last century of human underperformance versus the market. So clearly, human beings are worse than just buying the SPY. And in fact, that's what I always say to my friends and family. I say, listen, if I had not invented WhatRebelling Research and started this product, I would just put all of my money in the SPY and concentrate on whatever job came to me. Because Why would you waste money on underperformance? You'll just have less money at the end of the day. And so, whereas our AI has outperformed, but consistently outperforms the markets. So, as long as our AI works, I keep all of my money in our AI. The minute our AI seemed to not be working, I would go all S&P 500. So I'm a very matter-of-fact person. Maybe it's my mathematic background or my German background, but very matter-of-fact.
So Alex, maybe let's take a step back a little bit and break this down for our audience in layman's terms. Exactly what WhatRebelling Research does.
Sure. WhatRebelling Research, WhatRebellingResearch.com as a company has 2 wings. Asset management, where we have both hedge fund and managed brokerage accounts, clients in 43 countries, managing money for about 13 years. And then there's the research side. Now, just so you know, all of the asset management is powered by the AI. There's no human input. And, the AI's name is Star. I'm sure you've seen that in some of our press. But the research is, AI-focused, technology-focused. But, we've also interviewed General Petraeus, astronaut Scott Kelly, Ken Langone. So we're really just trying to educate our readers at the end of the day with an AI and technology focus.
Yeah, I mean, AI seems to be something that scares people in this day and age. Would you agree with that? And then what did you experience? I feel like, AI, when you think of AI, you also think of job security. Like, how difficult was it for you and your other co-founder to drill this into people that, hey, look, we can build something that can outperform your financial advisor, your financial holder?
Well, first of all, to cover your question about security, I want to jump back to Pim Fox, who used to have a talk show on Bloomberg, and he had my partner Spencer Greenberg on. His 25-second intro before Spencer came onto the set was a mixture of Terminator, the Whopper from Matthew Broderick's War Games, and a number of other very scary robotic and AI-based, of course, 2001: A Space Odyssey. So when you're just an average American, maybe not even any scientific background beyond high school or a little college, and all you see are very scary, images, how are you not going to be petrified of AI? So, right. I think the media, Hollywood obviously, has worked very hard, and successfully so, to scare human beings from robots. The robots have a terrible capacity, but so do human beings. Anyway, I feel that robots get such a bad rap, when in fact progress has always shown that people get an easier job, making more money in better conditions. Consistently over the last few hundred years, as progress in the Industrial Revolution has taken hold, workers have just had nicer and nicer and nicer situations. So when people worry about all the job loss here and the job loss there, I say, listen, our technology is going to create more and more industries. We live in a capitalist society. Wealth isn't given to us by the government. I'm the most anti-socialist person you'll ever meet. I believe that all of wealth is created by human beings. Do I have socialist tendencies to want to help the poorer classes? Of course I do. But when it comes to a free market, without a free market, we won't grow. The more government intervenes, the more the economy will slow. Government is inherently inefficient. And as a philosopher, you want to minimize the inefficient factor as much as possible. But anyway, as an AI person, I try to stay away from government.
So Alex, maybe we still stick on that topic, because I too agree with that as well. And what I found is I guess what's been interesting to me in this year is the emergence of avatars and AI and partner technologies that can work together. And one of those technologies is blockchain. And so I think fundamentally and inherently, blockchain is something that's revolutionary. It's more democratizing, and it's allowing for free markets and as well as free cash flow. Has your rebelling research looked into anything about blockchain, or have any plans in the future to maybe work with crypto investments?
Well, our research side, has written substantially on blockchain, and from a personal side, as Cameron and Tyler Winklevoss are childhood friends of mine. I have followed their work with both blockchain and Gemini, their new crypto exchange, and it seems to be very promising. But I'll say I don't have an expert background in blockchain, and I wouldn't want to waste your time discussing something that I can't add great value on. And so when it comes to blockchain, yes, I'm excited, but do I have much of an opinion on it? No, absolutely. I have very much a wait and see, not really sure. Where something like 5G, 5G, I'm a true believer. No one thought of Uber before 4G came along. And so when 5G comes along, we're going to have, $100 billion, $1 trillion companies that are going to be created based on technology that we can't imagine yet because it isn't here. We couldn't have Uber without 4G. Thus, there will be other gigantic companies we can't have without 5G. So I'm very excited about 5G. And also to hit the health issue with 5G, because I think that's very relevant. and it's usually the first question on consumers' minds. Well, one of Rebellion's smartest clients who I just love to chat with is a researcher and top guy at MIT, and he tells me that, yes, we're going to need more of these 5G units because it has a shorter periphery. Since the waves don't last as long, 5G waves are much more condensed. They're shorter waves, and so they can't go as far as 4G waves. But the actual carcinogenic radiation that we're going to feel from these 5G machines will be equivalent to a microwave. So I've been told that it's like having a microwave on 24/7. So it's not perfect. There's definitely going to probably be an increase in cancer. I can't imagine a world where there isn't an increase in cancer, but how substantial will it be? Who knows? And so 5G will come. It's inevitable. It's happening. It's here. But between the two of us, to say I can't imagine that cancer won't increase because of it is, of course it will. But it just at the same time, we're going to come up with, using 5G, probably fantastic life-saving technologies,
right?
Which could work to mitigate the higher deaths from cancer. So sorry to be so morbid on the subject. But,
no, not at all. I find it interesting, and this is something that our audience is to hear, no doubt. So I'm thinking also, Alex, is like predicting the future. Again, you right now are saying, I don't imagine a world without more cancer because of these waves, because of having a constant microwave onto our body. It is very difficult to predict the future. Are your machine learning algorithms, are these things investors or are they economists?
Oh, economists. The portfolios that our clients around the world get in their managed brokerage accounts or through hedge fund investors, these are just, we have two smart indexes. One of them is a cash equivalent, so there's no market exposure. It has no beta. And so, that doesn't, the idea is it doesn't go down. It just makes, between 2 and 10% a year. And then we also have our smart index, which is, just 100 stocks, global, usually 30 billion, 40 billion average market size. We don't buy too small. We don't buy too big for the obvious noise issues. When you get too big, you have too many factors. When you get too small, it's too hard to predict because you have we have too few factors that have too much, weight. And so, smaller companies have higher, betas because they're not as diverse, which also brings me to the global economy, which is people love to ask, what have you learned from working with a robot for over a decade? And I'll tell you, obviously my own machine learning, I went to the 2001 National Math Championships, not the worst mathematician in the world, but at the same time, as I've taught at Cornell and as I've taught at other schools, I do love to teach. It's one of my passions. I've actually been giving an AI seminar at Amherst College for over a decade, and I've been giving guest seminars for Yale Business, Yale Executive Education, Yale Law, and it's just a total passion. And actually, Rutgers, on Friday, will be my 4th year in a row where I'm giving a guest AI seminar at Rutgers. So, so teaching is my passion, which also gets me to my intern project. So if anyone's listening and they're between the ages of 16 and 26 or even 30, I have a lot of grad students. So generally, I want juniors and seniors in high school up to grad students who have an interest in AI or technology and want an internship, either remote or on site. We had about 50 interns so far in 2019 for RebellingResearch.com. It's a very strong intern program. And our interns go into great firms from McKinsey to Goldman Sachs, Tesla, Google. And so, it's really something I'm very proud of. It's almost like a little school, if you will, I guess, when you get to 50 interns a year. And every intern, I think really enjoys themselves. It's a place where people come and work on technologies that they're excited about. Probably the greatest amount want to work on AI with me, but many of them come and want to work on other stuff, automation, and I listen. I love to learn, and so I really just have a passion for that. And so I did an exploration with a Dartmouth engineer on applying machine learning to the weather, just for the fun of it. Why not? In fact, our AI, which powers Rebellion Research, was originally built by my partner Spencer Greenberg for terrorist hunting when he worked for a CIA and NSA consulting firm. And so his technology would look for terrorists via smart document search. Known terrorist A and known terrorist B are in the same apartment complex as unknown XY, and unknown XY is in the same soccer league as known terrorist C and known terrorist D. So all of a sudden, hey, this unknown becomes a known unknown, and then the government can track this known unknown. And so we took that AI technology, and between 05 and 07, we applied that to economics. Myself, Spencer Greenberg, Han Kui, who was a student of mine from Columbia Engineering, and it was it was a lot of fun. I've got to say, every day of running this business has been a lot of fun because what we do here is we focus on AI, we focus on education. Managing the business, takes some work, but everything in life takes some work, of course. So, it's really, half of an educational think tank Rebellion Research is, and half of an AI development firm. And I guess we run money too.
So, Alex, obviously with a lot of experience, you got some pretty wicked smart people in your company as well, designing these algorithms.
Well, Jeremy Newton, who really probably was the engineer who got everything put together. I mean, it was Spencer's AI, but Jeremy was the one who adapted the AI, made the AI work, because Spencer's AI at first was a total failure. And Jeremy came in and made Spencer's, failing AI work. And so, after Jeremy Newton actually, left us sadly because, Peter Thiel bought him out went to work with Peter for like a decade. And so, I guess Peter Thiel's the dream, and you want to do that. And the views are pretty amazing. But Jeremy's still my best friends. I was best man at his wedding. He actually married one of my best friends, Monica Zamiska.
Well, Alex, since you've the inception of the company, I don't know how many years ago was that, like 18, 19, 15?
Well, let's see. 05 is when the initial corporation started, and we were in R&D for 3 years. And 07 is when we got our first customer.
Okay.
So
let's say like 18 years.
Yeah, it's been so long.
So since the inception of the company, Alex, I wanted to ask you was, what have you learned from AI and robotics since then, and how has your thesis maybe changed?
Sure. No, the initial Rebellion Capital, that was actually, it was 04 May, Rebellion Capital. So for about 4.5 years, Rebellion was just started as a S Corp to develop AI at the time. And so we went around and we raised money to do our AI R&D. And in fact, that Rebellion spawned out of a think tank at Amherst College. Amherst College gave a funding grant to myself, the chair of the math department at Amherst College, Professor Tanya Lies, Jeremy Newton, who's also one of my founders of Rebellion Research, and we did k-means clustering for economic predictions. And we found k-means clustering to be too puerile. K-means clustering and random forest, it's good for framing a problem initially. But if you really want to make accurate, specific predictions, it's useless. And that's what we found. Jeremy and I decided we needed to pursue machine learning, specifically Bayesian machine learning, because Bayesian machine learning is machine learning that's designed for an ever-changing data set. And that's what the stock market, the financial world is, an ever-changing data set.
Right. So
Bayesian machine learning deals with this ever-changing data set perfectly. And so we then found Spencer, who was finishing his PhD at Columbia Engineering. And so anyway, Dr. Spencer, who's also one of my very close friends. I love my co-founders. We're all very close. We all love Rebellion. There's a lot of love at Rebellion Research, I must say. There's a lot of love, and many of our clients have been around. The system works, it charges low fees, it beats the market. So many of our clients become close friends, and In fact, I'm going to a client's show tomorrow, and I'm seeing a client for dinner tonight, and so it's really become family, if you will. Especially when we have so many interns. Last year was 27, this year is 50, so it's definitely a very growing program. And so the students come, and we work together. And the one thing I say to the students is, I will only be upset with you if you decide to work on something you're not passionate about, because I don't want to work with you on a subject you're not passionate about. Life's too short. I lost my sister-in-law cancer. Most beautiful girl in the world, brilliant, valedictorian for architecture class at Princeton. Died at 31, left 3 children, and I learned that you needed to carpe diem, seize the day, without a doubt, and live every day as if it could be your last. And so that's something I really try and instill in my. Secondly, never underestimate how dumb the stock market is. So those are the 2 things I was trying to instill in my interns. So make the most of their lives and never underestimate how dumb the stock market is. So
well, maybe we stick on that topic then. I think I asked you this earlier. I don't know if it got answered, but what did you learn during that process of this initial startup when you're developing something that is very difficult to grasp for many people, and also a lot of media and big time players are trying to take you down and come at you? What was that process like, and how did your passion for this machine learning, what type of factor did that play in the sustainability of the company?
Every company really is a tidal wave looking to take hold, over land that has tons of objects looking to stop it. And your passion for your goal, your business, is what's going to drive the tidal wave. And everyone's going to try and stop you and be negative on it and be negative. It's amazing how much negativity there is. Looking back, if I didn't love AI and machine learning, I would never have done what I've done, but I wouldn't have been myself. I've loved machine learning for 20 years, so this has been my natural destiny, and I had to pursue this destiny. And so, I always say, you've really got to pursue the destiny that you feel in your heart, because life is just far too short. But being an entrepreneur is terrible, painful, and everyone's going to tell you you're wrong. And the sad thing is, you probably are wrong. If 90 to 95% of new businesses fail, and you're starting a new business, there's a 90-95% chance that your passion is misplaced. And in fact, Rebelling Research, our initial passion, was it misplaced? It was to build a research product using AI. Maybe that would have worked. Maybe it would have worked better than what we ended up doing. But either way, your passion for your goal, like I said previously, will completely drive that tidal wave. And if you want to make traction, you need to be 110% committed. And if you don't have the passion for it, stay in your day job. The entrepreneurial life is brutal. It's painful. It's relentless. And you're going to have to pivot multiple times in unexpected ways at unexpected times. So it's a series of curveballs, one after another.
Alex, leaders become leaders because they do something that's not externally validated. That's something kind of what you have been, attempting and following for these past, 18 years. What type of leadership qualities does it take to sustain a company like this?
Yeah, no, going back to what I said earlier, you have to be passionate for your goal. You have to be committed. If you're someone who wakes up at 10 a.m., that's not going to happen. I try to get to the office these days at 5 a.m. And the more successful Rebelling Research is getting, the more I find myself getting driven. The larger we get as a company, and the more I see our customer size increase, the more I feel like I need to work to 7, 8 p.m. and getting to the office, like I said, some mornings as early as 5, 6 a.m. Most mornings I try to be in by 6:30 at the very latest.
Alex, how many other machine learning, predicting algorithms are out there right now? Do you have a number?
So I would say first of all, 99.999% of machine learning algorithms in finance are for short-term trading. Rebellion Research still is really one of the very few economic based machine learning predictors. It's a very tough thing to do, and it took us a lot of adaptation to make our technology work, but it's very tough to do. In terms of machine learning algorithms out there, it's a field that's proliferating throughout on a horizontal level all of our society and our economy. Like I said, it's a simple outboard motor on a rowboat, if you will. It's something that can make very simple predictions. So whether you sell ice cream or whether you sell, cattle feed, you could use machine learning to make smarter decisions, buy more of said product at said time, and thus, have more efficient cash flow and save money, or, understand this customer's habits at this time. I mean, it's really very, I always tell people, if you want to understand machine learning, start with the fantastic Benedict Cumberbatch movie, which actually was produced by an old buddy of mine, Teddy Schwartzman. Really good. It's called The Imitation Game. And Teddy's firm is really taken off, Black Bear Pictures, so I just want to give them a shout out. And they've done a lot of really cool movies. The Imitation Game really is the heart of what we're doing in Rebellion Research. We're code breakers. We're just looking for patterns, if you will. We're looking for patterns that make Ferrari an attractive buy a year ago when the markets are crashing. And markets are crashing for passionate reasons. The economy is strong. The wealthier are still spending. If the wealthier are spending and the economy is strong, Ferrari has a higher than average chance of outperformance. Especially at the time when the AI first liked Ferrari, it's like 13 times or 16 times PE, and Ferrari consistently been above 20. It's an extremely premium brand. So that Ferrari's been like a 60% returner. But that's also something about the Rebellion Research. We hold stocks for sometimes 2, 3, 4 years. So the system will buy a stock for up to 100 positive economic and fundamental reasons. And if those reasons stay, there's no reason that AI won't hold said company for many years. So it's a really very long-term situation.
Alex, while I have you here, I'd like to pick your brain. People in this impact space, social enterprises, they are all claiming we need to think long-term about our business decisions today that are going to impact tomorrow, and that these certified B corporations, these companies that are focusing on measuring more than just profit, they seem to do at least be more consistent in the long run. So therefore, a theory suggests if we all go towards a long-term stock exchange, we could really have a both an environmental and societal impact of raising the poverty and reducing our carbon emissions, or say whatever. This is a theory. How do you see machine learning and long-term long-term investments changing the future for society and the environment in the long run? And have you seen any data to back this?
I think that machine learning will just help increase the lowering of cost. I think the fees in finance are dropping on their own, and I think that automation and machine learning specifically will only help expedite this process where fees will drop. And in terms of social impact, I have trouble seeing direct social impact beyond the general theory that a society that continually technologically expands has a more efficient carbon footprint. So, but at the same time, I think you're going to see consumers make choices based on footprint. And I believe that as AI machine learning becomes more and more in vogue in society, you'll have more and more machine learning investors. You'll have more and more machine learning clients, people who want their money preferentially run by machine learning over a human being. As people are are more and more comfortable with the data, and they see that maybe an average machine learner off the shelf that's available for free from Google could beat on average a U.S. mutual fund manager. Over time, might become more and more. You've got decades of media that have just absolutely petrified consumers when it comes to AI and machine learning, and most consumers are very skittish when it comes to that. So the idea of letting an AI or machine learning system take hold of their wallet, that takes some getting used to. That's a comfort level that
Right.
I haven't seen quite take hold as much as I'd like. Yeah. But it's taking hold. But it is taking hold, and it's taking hold greater every single year. We see, whether it's our own website, which we had a record website volume. I think it was 69,000 people visited our website last month for November of 2019. We continue to see more interest in our firm, but at the same time, if you look at machine learning and AI, it is expanding now. So you've had a few AI bubbles from the 50s and then the 70s and the 90s. What's different about AI this time is that there's a lot of profitability underwriting the AI research.
Okay.
Be it WhatRebelling Research,
For
which
risk.
to many people is a pioneering out there technology firm. We're profitable to a Google, which is one of the most profitable companies on the planet that is trying to jump on everything AI and machine learning possible. Same with Facebook, same with Netflix, same with Tesla. And the fact is, find me a company that isn't trying to jump on machine learning. I came across John Hess, the CEO of Hess, at a dinner the other night, and he goes, I see all these energy firms jumping on machine learning. I said, it's funny, actually, my friend just got hired as machine learning head for a Shell, and yeah, they are jumping on it because it's so useful. Because Hess has to look at that too. I said, yeah, it's amazing. An entire company like Hess, has according to the CEO, almost no AI, and so the efficiencies that can be added and the value that can be brought there is tremendous. So it's not going to have a bust this time because you've got profitability driving the further interest. And so as also people can take machine learning and create simple products online and simple services now. So whether it's your multinational company or startups in garages across America, machine learning can be used profitably. And bubbles fail when the profits aren't there. And that's what happened in the dot-com 2000, 2001. It took time for the profits to push those dot-coms back up. And they did. From Amazon to eBay, they came back. And so this time around, we don't have a lack of profits. We have tremendous profits. And so Singularity, according to Gordon Ritter, who I think is the smartest machine learning man in finance that I've come across years, will have Singularity in 5 to 7 years in finance. So I look forward to that.
Interesting. And Singularity for folks listening to this too, and correct me if I'm wrong, Alex, but Singularity is like the point in time when AI overcomes, or I guess an outsmart a human being. Is that kind of like the consensus of Singularity?
Yes. Think of it as a technology that can just do it on its own. And so you don't create the matrix, it creates its own matrix and tells you how to do it.
Okay.
Yeah, and it's really, according to Gordon, 5 to 7 years. There's a degree of singularity to WhatRebelling Research is the thing. There is, and that the program is on its own now and has been on its own, learning on its own now for well over a decade. But the idea that it could have started on its own and done it without us feeding it, we're talking about a technology that will pick its own data and pick its own style of investing. From a holding period to its portfolio optimization, whether it wants to put 2%, 1%, or 5% into one asset that won't have any input from the human being. So we're talking about an entirely designed ecosystem for investing. It's what will happen at the end, who knows? Will it be a day trader, short-term trader? Will we have the idea is we'll have multiple singularities in time, day traders, short-term traders, long-term traders, and the various strands of singularity will, find what they're best at and try to hone in on those skills and, kind of further their strengths.
That's an interesting take. I feel like a lot of trends don't just happen on a whim. They're just built up of it's a big ball of momentum. If you look at
everybody learns from each other. Yeah,
definitely momentum built up. You said the 50s, the 70s, the 90s, and now it's different because of you can underwrite it now, and so that has to do with insurance and risk. Maybe talk a little bit about what your clients fear when they come into the company first. Is it their data protection? Is it hacking?
Oh no!
What are they fearing?
No. The clients are, well, first of all, the clients that we get, 65-70% of the time they work in machine learning, so they don't really fear anything.
Correct.
But the clients that don't work in machine learning and are curious about machine learning and are curious, and they see our returns and they say, hey, your returns are above my returns over the last decade and your fees are very attractive, but I just don't know how I feel about putting 5, 10, 50, 100, $1 million under the management of an AI system. And so that is, at the end of the day, when you boil it down, the number one barrier to entry for our clients. And so once they get past that, they need to get comfortable. And some of these clients take years to get comfortable. Our largest client now, I think first came to us 4 or 5 years before their initial investment. And then that initial investment, so it can be a very long process. And so, but the good news is that it's increasing at a very fast rate, actually, especially lately. It's everything I could have hoped for, to be honest. I'm very, very, very happy with how much society is embracing AI and machine learning. It's exactly what I would have most wanted. So I fell in love with my wife, and I felt I couldn't have been luckier. Between my wife and my daughter, I feel the most blessed person in the world. I always think about the Lou Gehrig luckiest man in the world speech, but I also feel very lucky that our society is embracing a technology that I have believed in now for 2 decades. So, I feel very good about that.
Yeah, I think the adoption of AI is coming, and it's coming rather fast. So, Alex, maybe explain this. Going forward with this company, what type of impact do you see this really having on society if people do adopt this long-term machine learning faith? If people are saying, this is obviously objectively outperforming the S&P 500 year after year, everyone goes towards, in theory, everyone goes towards, machine learning investments approach. What does the future look like?
Two words: efficient markets. As more and more AI systems control the capital that moves our markets, we are going to have fewer 87 crashes and 29 crashes.
Okay, right.
So you have much more of a situation where you've got markets that are extremely efficient right now. We're talking about fewer crashes, but also, fewer jump upwards. The markets are not going to go at rates that, are irrational, because you're going to have fewer and fewer irrational players. And so when I say never underestimate how dumb the market is, that's because the market is controlled by human beings. And human beings, as Hobbes said, the passionate man is the dumb man. And never do people get more passionate than when it has to do with their own money. And so the stock market is the ultimate manifestation of a passion-driven entity. And so as we take more and more passion out of what drives the markets, we're going to have more and more efficient markets. They're not going to move as crazily, and there's going to be less volatility, and they will be more efficient, ideally. But the second, coupled with, is we're in a whole new world now of cheap money, where whether it's a Republican or a Democrat, there is no political incentive to make the US dollar expensive, because when you make the US dollar more expensive, you're clearly slowing down the economy. And so whether you're even Bernie Sanders or you're Donald Trump, it's hard to find those two to agree on anything, but they both agree on 0% money. And when you get everyone to agree that money should be free, we're in a whole new world where almost you have to invest in the stock market, because inflation is going to move quicker and prices are going to increase at an accelerated pace. And so I think we'll have more efficient markets, but I also think that inflation will be something that will become more and more and more of an issue every single year, probably until you and I are both dead.
Alex, the argument that we can slow down technology is like non-existent. Like that horse has already left the barn. It will continue to grow and get better. And, according to Moore's law, right, half its costs, or like, I think it's like double its efficiency or something like that.
The Dark Ages slowed down human beings. So if China and the US fall and we have social unrest and anarchy takes hold, yes, technology will be slowed down. Socialism took down Venezuela, the USSR. I do believe that socialism will probably inevitably take down the US, and then when the US is taken down, we'll have another Dark Ages, and so it won't just go on forever. Human beings are, a very warmongering people, and we also have a tendency to give things away for free. So I think it's inevitable we will enter, sadly, another Dark Ages. I don't know if it's 50, 100, 200 years, but, the history has a tendency of repeating itself.
Yeah, it's something, this is kind of a side note, but you mentioned Venezuela, and I read a report that was like people in free market countries have a tendency after a while to start regressing towards like a socialistic mindset, and then people in socialistic societies continually want to go to a free market mindset and a free market economy. So I found that really interesting, and kind of going with movements and trends around the world. Go for it.
For me, the Roman Empire is the greatest educator of where our future will go. We've got 1,000 years. Well, you've got 1,000 years of human societal development, and you can learn for me, endless lessons. And so, there you had the tendency and desire to spend more domestically. You had people who wanted to participate in the military fewer and fewer. All of the exact same trends that are happening in the US happened in Rome from 180 AD to 476, when it was taken down by Attila. So it's not like we're not exactly repeating everything that happened to the Roman Empire. So there's nothing new about the playbook. It's the exact same playbook that happened after Marcus Aurelius' death. You had an increase in government spending. You had an increase in currency spending. Money became cheaper. Citizenship became cheaper. Every trend that's happening in the U.S., that's been happening in the U.S. over the last 20 to 50 years, happened in the Roman Empire during its fall. So it is inevitable that, sadly, the U.S. will fall in some way. Whether it's as violent a fall as 476 was for Rome, I don't know. Probably not. But at the same time, the Holocaust was only 70 years ago. We're not that removed from mass evil by a G8 country.
Alex, I guess the argument I was trying to make was for equality purposes, we're never going to have equality. And I think that's a theory. I don't think that's ever going to happen.
Oh, of course. Yes. 100% agree with you.
But
yes.
Technology can be used as a tool or a weapon. What are some questions that maybe people in machine learning or organizations must be thinking about in order so the common person who doesn't have access to a computer right now. I think it's like only like 20% in non-urban areas in the United States. What questions do we have to be asking in order so these people don't get so far left behind?
Now, Kevin, the great thing about today's society is that you can learn new skills 3 weeks to a month. 1, 2, what platform are we on? We're on Zoom right now, founded by a Chinese immigrant who didn't even speak English. Now is worth several $billion. So what technology does, as you said, is it is the Great Equalizer. The Cult 45 was the original Great Equalizer. No, technology is the real Great Equalizer. Your point about that couldn't be more correct. It's going to, as long as we give technology a place to grow, we'll continue to grow and grow faster and faster and faster. And it will allow the poorest of the poor to become educated and become the richest of the rich. And it's something that I love about my favorite part of America is that it allows the poorest of the poor to become the richest of the rich, and it allows meritocracy to take hold. I believe in meritocracy over anything else, and I want to see the smartest people have the most power. You'll have the most efficient economy. More companies will be created. Zoom was an idea. That idea became a multi-billion-dollar entity which paid taxes, which employed people, which made the economy go up. Why has the economy grown? Because companies like Zoom have been created. And so what happens in these social societies is they get there and they're like, oh, yay, free stuff. Oh, wait, we're not creating Zooms anymore. We're not creating Ubers. The value, our money is not buying as many, bags of corn and bags of rice as it used to, because nobody wants our currency because we don't have things that make our currency valuable. The only thing that makes a currency valuable is the economy behind that currency. And if that economy doesn't have new ideas like Zoom, Google, Uber, then that currency will fall in value. And so one of the many things I've learned in working with a robot the last decade plus is how much the US not only dominates, but controls the global economy. You've got our AI has subdivided the US economy into 200 sub-industries. And Japan and Germany and Switzerland are next, and they have about 10 sub-industries, and that's about it. And it's so hard for the AI to invest in any other countries because the risk becomes so high, because these economies are very simplistic, whether it's Chile being simply based on copper, or Brazil simply based on steel and oil, or Australia, which has become basically 45% based on China's industrial output. You've got a lot of gigantic countries whose economies are not comparable to the US diversification and have major reliances on 1, 2, 3 assets or other countries. And so when you have few factors that control much of the outcome, it becomes hard to make a prediction. It's like PG&E. PG&E may go up as a stock or may not. What's California going to do? Who knows? There aren't many factors, and the factors are very binary. And so it's impossible for the AI to make an intelligent, kind of risk-accurate call, because there's just no way to know. It becomes too much of a gamble. And things that become a gamble, we can't invest in. Buffett always says, there's no called strikes in finance. And so we can take a pass on any country and take a pass on any stock. And if there's too much risk, and if the potential positive outcome for that stock or asset class is based on too few other factors, then we just move on to the next asset that has many positive factors. Ideally, the AI wants 70 to 120 unrelated positive factors, from a strong currency to strong industry to strong balance sheet to strong income to strong multiples relative to its competitors. And so, a lot of these very simplistic ratios can be extremely important for the system.
Interesting. Well, Alex, I had a great time having you on the show today. We talked about a lot of bold predictions coming up here, or actually we didn't talk about really any predictions, but how you're Machine learning can pick up on a lot of predictions. We talked a lot about technology being a tool or a weapon, and what decisions and questions we need to be asking ourselves before we make some decisions. So, Alex Slice, the last question I have for you is not what is your definition of a real leader, but I want your boldest prediction for 2030 coming up.
Social revolution in China, without a doubt.
Social revolution in China. What does that look like? I'm actually curious.
I don't know how bad it gets, but
what do you mean by that, I guess?
Well, see what's going on in Hong Kong, and imagine that spreading to hundreds of cities.
Okay. Yeah. Okay. Interesting. All right, Alex. Well, hey, I appreciate your time coming on here. I'm glad we got connected. Enjoy the rest of your day. Any last words for our audience about more information about Rebelling Research and the internships?
Yeah, well, rebellingresearch.com. You can open an account in 71 countries around the world in 5 minutes, and we've beaten the S&P 500 for over 13 years, and we offer internships to 16-year-old to actually we have 40-year-olds who are interns. We've had people who taught at Johns Hopkins and USC. So the internship program has a large age range. You have to be thirsty for hard work and knowledge. I can be a tough boss, but I'm a very loving one. And so, yeah, rebellionresearch.com. Check us out. And it was absolutely my pleasure being on the show. I had so much fun chatting with you.
It's always great to have an expert on like you, Alex. For Alex Fleiss, I'm Kevin Edwards, asking you to go out there, learn about machine learning, folks. Take that risk and always keep it real. Thanks, Alex.
Awesome. Bye.